What's going on, everybody? Mark McInerney, President and CEO of Codemark Financial. Welcome today to another episode of Music, Mortgages, and Life. I'm your host, as you know, the Mortgage Genius. I think it pops up over here, right? I'm going to work out on just kind of being like, because I'm normally doing it here, and although I feel like this, it kind of just pops up over there. Anyway, all right, that was my man Dick Dale, Richard Dale, Dick Dale. Most of you guys might know that song from Pulp Fiction. That's why I started throwing in the, and I don't even know, was that the song that they were actually dancing to in that part of the scene? My man Joey knows so much, like, beyond his years of his actual age. He's like an old soul trapped in a young body. But that song is Miserlou? Miserlou, yes. M-I-S-E-R-L-O-U. So if you look up Dick Dale was actually just rather recently passed away. And that's how we kind of came into this. Very interesting. I don't really leave a lot of things to coincidence and chance. I actually kind of feel like when I say something or see something and it looks and appears to be like quote unquote coincidental, it actually is the roadmap of where it is that I should be. So this week I came in and I was thinking, you know what, I want to start talking about like old school stuff. All right, what would be old school stuff? Let's put some music around it. Back in my days in music, I used to always be inspired by a song to start creating the song that I wanted to create. Music has that kind of influence on me. So I heard Jungle Boogie the other day, which we'll play on another one of our episodes this week. And as I was talking to Joey, I said, hey man, look, I'm kind of got this Pulp Fiction feel for the week, because I'm going to talk about home remodeling and home renovation loans, because those are kind of in relationship to old school homes. Boom. He goes, hey man, did you know that dude Dick Dale died? And I was like, what did you call me? Because saying Dick Dale sounds kind of strange a little bit. But anyway, I was like, yeah, no, I get it. Okay, cool. So we just looked it up, and as a matter of fact, it's kind of ironic, as we were both sharing. He died of 81 years old, heart failure. God bless the man, rest in peace. But it's kind of rare that most musicians even make it to that age and die of anything that is kind of maybe just, let's say, natural health causes rather than, an OD. So, I mean, thankfully it wasn't that. Anyway, needless to say, we are back in here again. That was Dick Dale and the Miserlou, and we've got more of these kind of old school songs to come up this week. We're talking about loans for old school homes, right? Renovation loans, remodeling loans. We kind of talked a little bit about what's the difference. I'm here to show you today that there are actually, well, as we have discussed already, two types of home renovation and remodeling loans. Yesterday we talked about the conventional side, which is called the Fannie Mae Home Style Loan, and today we're going to talk about the FHA side, which is the FHA 203K loan. So let me get behind my desk and start sharing the genius of all of these different types of loans. So, all right. Might help actually if I've got that going. Thank you very much, Joey, on that. All right, so as we said, in this case, actually, I should make mention, you can actually use a home renovation type of loan, as we said yesterday as well, to either purchase or to refinance a house, okay? So this is a loan program available for either scenario. Now, I kind of think that it's maybe a little bit going to be easier on your stress level to maybe do it if you lived in the house. You could do it with purchasing a house. You just need to have a very open type of communication with the seller, because it takes a little bit to kind of get contractors in, coordinate with the HUD inspector and the likes of that, for the purpose of being able to figure out what the lender is going to qualify you for, okay? So that's no different, as we expressed yesterday in the Fannie Mae Home Style Loan. Is not any different in the FHA 203K loan either. So the types of loans, as we said, FHA 203K, home style loans. We're talking about the FHA loan today. Here's a couple of the nuances about the FHA 203K. Renovations can only be done on primary residence only, all right? So sorry, investors, you can't use this loan to purchase an investment property, or even for that matter, guys, if you're looking for that nice beach house down in the Galveston area, or, lake house up in Conroe, or wherever you are in the state of Texas, you can't use this to purchase a house and use this money for that second home and or investment home, okay? Now, Fannie Mae, no problem. FHA 203K, only on primary residence. Another one, it's a little bit limited. It's a little bit limited in the types of renovations it's going to allow. It's not for, it says luxurious, but let's say, a lot of bit of the kind of cosmetic stuff that most people tend to lean towards, right? Like floors, bathrooms, countertops, that type of stuff. This is going to be more structured towards things that are going to be structure or mechanical. So it could be like towards the foundation, a roof, a lot of the things that tend to be, I guess rather unsexy, but are incredibly important, though, needless to say, right? But you could spend FHA money on this and not really feel like you did anything. You're like, oh man, the pipes behind the wall are no longer galvanized, and you're like, all right, so I can't see it. But at least you'll know that you won't have anything burst onto those beautiful floors that you might have to do at a later date, right? Also, FHA, as it is in all cases, is rather flexible on credit score. It's not very credit score driven, and it is also flexible on debt to income ratios, meaning it allowing a higher debt to income ratio. This is always something that's never really attractive about anything regarding FHA, and that is there's going to be mortgage insurance. There's going to be mortgage insurance in two forms. FHA charges an upfront mortgage rate, and then there's a flat rate that is also paid monthly. So right now that is currently 2.25 for the upfront and 0.85 on the monthly. What does that really mean? Doesn't matter. Give me a call and we'll break out the numbers. Needless to say, it's 2+ % of whatever the loan amount is rolled in addition to on top of the loan, and then you're going to pay that flat rate over the loan amount divided by that 0.85 amount through the course of the entire loan term. So MI, as it does in all other FHA loans, lasts forever over the duration of the loan itself. Another positive, you only need a down payment amount of 3.5%, which is good. FHA is technically considered the least amount down. There are conventional loans that can go lower, but in this space of the renovation loans, FHA is going to trump in this case. You can put down the least amount with 3.5%. And as I said, they're not so credit score driven. You can find some lenders. We've got some lenders that are willing to go as low as 580. All right, so would you like to get qualified for this type of loan? Would you like to talk a little bit more about what this can get you? Good, great. Hit us up because you can get pre-approved and get that done usually in 5 or 10 minutes. What is I also like to share is coming tomorrow and the next day I'm going to have my wife in here talking about monies that she invested in a flip, where you might want to allocate those investments. And then we're going to have Jennifer McCalman with Part 3 Realty talking about some of the things that she's seeing as a trend, in terms of where are the places that people are updating, what are they doing for the updates, all right? All right, guys, I'm Mark McInerney, President and CEO of Codemark Financial. Watch this. The mortgage genius right over here, right? Have a great, powerful day. Know who you want to work with, like who you want to work with, trust who you want to work with. All right, I'm out of here.